So a new article just dropped asking the question, are higher mortgage rates enough to slow down the San Diego home price growth? That's what we're going to get into in this video. The article actually interviewed and kind of got some snippets from a bunch of economists right here in San Diego. So we're going to go through 4 of them. Some said yes, some said no, but get into their reasons and figure out what's really happening here in the San Diego real estate market. So it's important for you as a potential buyer. Obviously, interest rates are going to affect affordability. Also, higher prices are going to make it less affordable. And for sellers, obviously out there want the highest price possible for their house. Now, interest rates coming down a little bit would actually help with that, because as rates come down, buyers have a little more purchasing power where they're able to potentially offer a little more for the house because their payments are going to equal out at a lower interest rate. Now, San Diego home price growth, in a recent report, it was a Case-Shiller index, the San Diego real estate market had the highest growth in all of the United States. And yes, that report's relevant, but it's also looking back in the past. It's few months ago, what's actually happened right now in the real estate market. Now, over these past few weeks, interest rates here in San Diego have seen the highest point in all of 2024, peaking above about 7.5% for a 30-year fixed rate mortgage. We've seen that come down over these past few weeks. Right now, I just looked at it today. It was 7.12. So we've seen a significant drop. But how far would it need to drop to have an effect on home price growth here in San Diego, whether it going up or down? So let's jump into what the economist said and figure out if higher mortgage rates here in San Diego will slow down home price appreciation. And as always, if you guys want to start that conversation, we are a real estate crew right here in San Diego. All of our contact info is right below. That's what we do every day, is help, well, besides videos, we help local buyers and sellers right here in the San Diego real estate market. So feel free to reach out. We can start that conversation, hop on a Zoom call and get you dialed in, answer all your questions, because obviously every situation is a little bit different. So the question that was asked, is a 7.52% interest rate enough to slow San Diego home price growth? So first up is Lynn Reeser, an economist, and she says, yes, housing inventories have been constrained by low construction and by the preference of empty nesters to age in place rather than downsize. Homes now turn over only once every 15 years, when in the past we saw this number at like 7 to 10 years, which was traditional. Now we are seeing that time being expanded. So with that, you're going to see less homes turnover, which is part of the reason we've seen a lower inventory environment right now. High interest rates will constrain new building, but will have an even greater effect on demand, meaning as interest rates go up, there's going to be less buyers out there. And that's definitely what we have seen as interest rates have gone. First off, it was like a 6%. Once it hit that, slowed down a bit. People got used to it, picked back up. 7% was the next one. It did hit 8% briefly last year. Now, on the new building part, here's a quick little chart for San Diego to see the number of permits pulled. We're at the highest point we have been since at least 2012. We did almost touch 11,000 right here back in 2016. Now, the number of permits were pulled were closer to 11,500. Now, a lot of that is right here. You can see one unit is only 3,000, 2 to 4 units is about 468, and 5 units or more. So a lot of multifamily. But even though some of these permits were pulled, like I said, a lot of it's multifamily. So when we're thinking about buying or selling houses, you're thinking of single family homes, townhomes, that kind of stuff. Some of these projects where these were pulled are, apartment complexes like this down in Riverwalk. Construction was paused on the mega Riverwalk project in Mission Valley. So you guys have seen a lot of the construction going on down there. They have it graded. They have it like getting ready to go. But recently, the real estate developer, Hines, is waiting for market conditions to improve, meaning the project's first 2 batches of apartments are still more than 2 years away. Now, there's supposed to be some townhomes in there as well as some retail space and parks and all that kind of stuff. But they have decided to put it on hold even after putting a ton of infrastructure in right now. So is this a trend? Will we see more construction projects be put on hold due to the higher interest rates? I guess we shall see. And then Lynn also says all cash sales and the support of family members in assisting homebuyers will not be enough to finally offset the effect of high mortgage rates. So basically she's saying because the interest rates are much higher than they have been in past, the unaffordability has gone up. The number of active listings has actually trended higher here than last year. So we're sitting about 31% higher, meaning more homes sitting on the market with less buyers, which you would think would cause prices to go down a little bit or at least moderate. And so I think the longer the interest rates stay at that elevated level, we'll see a little bit more moderation in home price growth here in San Diego. One last thing on demand, you could kind of see how many sales there's going to be in the next coming months by how many current homes are pending, and compare it to where we were last year. Are we well below? Are we well above? Where do we sit there? How many buyers are actually out there with these elevated rates? you can see we're trending right where we were last year. So while year over year, we're about 1.8% up, we're still basically going along the same line as we were last year. Next up is David Eli from where I went to college, San Diego State University. And we're looking at the same question: is a 7.52% interest rate enough to slow down San Diego home price growth? David Eli says no. Many homeowners are making the decision to stay in their current home because moving would mean giving up a low rate mortgage and taking on one with much higher interest rate. And I think that's true. That's part of the reason why we have seen the number of homes on the market historically low compared to where we were just in like 2019, like a normalized year here in San Diego. And so a lot of home sellers right now that we're seeing and that we're helping out there are people who are relocating elsewhere, moving out of state. We have one who's got a new job out in Colorado, so he's moving out there. He lived here a few years, gain some equity, going to take the cash he got here, buy another house out there. And then I was out at open house this weekend chatting with the agent about why that seller was selling. They're moving to Arizona and basically taking the same thing. You know, they've lived in the house for a long time. They're going to take what they get here, move it out there. Obviously, you get more bang for your buck. You got pros and cons of moving out there, but that's like one of the biggest sellers. And then also people who've had like a rental for a long time and either they're been over it or they just want to move on and put that money elsewhere. Those two sellers have been a lot of what we've seen over these past few months. David goes on to say a meaningful drop in mortgage rates in the near future seems unlikely. With a modest inventory of homes for sale, upward pressure on housing prices will persist and likely outweigh the impact that high mortgage rates have on the demand for houses. And so how do we compare for inventory for these past few years? Are we trending up? Are we trending down? You can see we are trending up a little bit. Now we're up 31% above last year, but you can see this line right here, 2022. So we saw a huge spike in active listings. And during that time, towards the end of the year, the median sales price right here started to drop as well. You can see towards the end of 2022, we actually saw a decent drop in the home price here in San Diego. Now we're up about 10% year over year, sitting about $924,000 for the median home price here in San Diego. And so basically it comes down to, are there enough buyers to purchase the number of homes that we have out there right now? And currently, yes, there's a good equilibrium. While we have seen it slow down a little bit, and the number of offers for each property has slowed down a little bit. Maybe it's sitting for 2 weeks as opposed to that first weekend where you're getting 5, 10, 15 offers. Now it might be sitting for that first weekend and then maybe 1 or 2 offers, a little bit of competition out there. Every price point is going to be different, obviously, but just talking in general. And this has been in the 7 to the 7.5% mortgage rate environment. Now, Norm Miller from USD says, yes, he does believe that the 7.52% interest rates or the elevated interest rates, wherever they might be, are enough to slow down home price growth here in San Diego. So he says at least through May, perhaps June, Case-Shiller figures will continue to show significant positive home price increases. That was the report that we said at the beginning that showed that San Diego was the highest in home price appreciation. Unless mortgage rates drop to 5.5% or less, we have an inventory shortage from rate locked in owners. Once again, referring to anybody who's over these past few years refinanced their house at 3.5%, 2.5% in some cases, not necessarily want to take that equity, put it somewhere else, or not needing to. And so just being comfortable in their current payments. And a lot of people over these past few years, I did it twice over these past few years when interest rates were super low. And because of that, he says that will hold up prices. With inflation lower by year's end, mortgage rates declines should follow, but it might be 2025 before we see rates under 6%. So we haven't seen rates under 6%. This is going back an entire year. This time last year, they were about 6.67%. As we did trend up into 2023, we saw them go above 8%, come back down, and then since then have risen up to, this was 7.51%. But over these past few weeks, you could see it came down quite a bit. Now we're not at the 5.5% levels that he was saying, but it is working its way down there. And then also the significance of May and June, and then potentially seeing home prices flatten out. Our typical home buying season is right now going, we usually peak in price wise and number of homes on the market in May, June, or July. So we're coming up on that in these next few months. And then typically towards the end of the year, as there's less people out there looking for homes, prices do potentially come down a little bit or at least flatten through the end of the year. Now, one good thing that we have seen recently, so this is just for San Diego, this is for the city of San Diego, is the inventory. The number of homes on the market has risen. Right now, there was 522 homes on the market compared to last year where there was 330. So this trend line, you can see most of last year was like flat. I mean, we've had a little bit of up, a little bit of down, but for the most part, it was fairly flat. Now, typically you see it kind of come up to here where we're in May. It rises up to, like I said, June or July, starts trending down in August, September-ish, and then drops back down. And that's typically what you see throughout the year. Now, right now, we are seeing that growth, which is going to help with elevated rates. If they stay elevated where they are now, there's going to be less buyer demand out there, and potentially prices will follow and kind of flatten out from there. But if interest rates do fall to that 5.5% that he was talking about, I think home prices here in San Diego are going to continue to go up pretty quick. Now, someone else from USD, Alan Jin, he says, no, the gap between the old interest rates and the new ones is so large that many homeowners can't afford to sell their homes and take on much higher mortgage rates. On top of that, institutional investors like BlackRock are entering the market with large amounts of capital and making all cash offers, which insulates them from higher interest rates. So what is the market share here in San Diego? And we're sitting at 25% of homes have sold to investors. This was the last quarter of 2023, but there's been a huge run up over these past few years. Now, some of them are those big institutional investors. Open Door had a lot of purchases. They were just kind of flipping homes. But right here in San Diego, there's a lot of small investors, mom and pop shops that come in and flip homes. While there is a lot of investors, a lot of these investors aren't necessarily coming in, buy and hold, keeping these homes for long term. They are buying them, fixing up, and putting them back on the market. But I shared this a few weeks ago. Share of purchase homes bought by investors was 25.1% at a median home price of $915,000. So there's definitely some competition from those home buyers. Obviously, those homes are going to usually need to be fixed up. There's a few I'm thinking of. We were checking out homes. There's a few in Encinitas where they came in, bought it for about $1 million. Basically gutted the whole thing, new kitchens, new baths, new flooring, paint, etc., all that kind of stuff, put it on back on the market for 1.3. Now there's two on the same road that I was keeping an eye on that they came in, and the first one sold in 4 days. The new one just came on the market, same price, basically the same model. And the first one was a few months back. So we'll see where this one compares, how quickly it goes, what price it goes for. It'll be a good comparison to see what happens in the market as a whole. The lower supply due to homeowners not selling and the increased demand due to institutions will continue to push housing prices higher here in San Diego. So he doesn't think that higher interest rates will necessarily bring prices down. So as you can see, a lot of people have different opinions on what's going to happen in the market. It really comes down to what's your specific situation, what are your goals, what are you trying to do. All of this market news and the interest rates and all that kind of stuff, it really comes down to, like I said, what are you trying to accomplish as a buyer here in San Diego or as a seller here in San Diego? And that's what we do. We have a real estate crew right here in San Diego, and we help buyers and sellers. So if you guys are thinking about making a move, you got some questions, feel free to reach out. All of our contact info is right below. We got your back. We're making the move here in San Diego.